kisses are bloody awesome. Who doesn't love kisses with their furry friends? Kisses with a baby? Butterfly kisses? Blowing kisses from across the room? And kisses with our kids. But there's one type of kiss you never want to get, and that's the kiss of death. But very scarily, the stock market has confirmed a kiss of death technical analysis signal, which also occurred in the largest stock market crashes throughout history. So are we set up for stock market carnage ahead? I'm Biko Konstantinos, and that's what we're going to talk about today. You can give me the equivalent of a kiss by liking this video, and you can't stop there, you gotta hit that subscribe button too. Now let's have a look at the charts and see what this kiss of death signal could mean for the stock market and the entire global economy. First, we want to bring up a chart of the S&P 500, probably the best gauge of the overall stock market. This is the daily, but we don't want the daily. This is the weekly, but still not long enough. We need the monthly chart, and check it out. It's beautiful. The monthly gives you such a good picture of multi-year trends. We can see here in the 2000s, we had a decade of zero growth as the stock market faced two large bear markets. In 2000, we saw the dot-com boom bust, and in 2008, we saw the global financial crisis. But then began the mega boom. We saw beautiful rises after 2010, but after COVID, we saw a crescendo and a potential blow off, which could mean the end of the boom that's been going for over 10 years. So once you've got your monthly chart of the S&P 500, you want to add a 21-month exponential moving average, which I've done here in blue. Now this is just a moving average which averages the prices of the S&P, but by making it exponential just means that recent price action is more heavily weighted. So there's 4 conditions that need to be met to confirm a kiss of death technical analysis pattern. First, we need an all-time high, which we have here at the end of 2021, where the S&P hit around 4,800. Next, we need a break below the 21-month EMA, which occurred right around here. Then we need what's called as the kiss, where the price comes back to the 21-month EMA, gives it a big kiss, and then falls back again. Now, the final condition is a monthly close below the previous low, which was here. So we saw that occur in September 2022. And so far in October, which isn't finished, we saw a short rally but a quick retracement. So here we have the kiss of death pattern beautifully confirmed. All-time high, drop below the 21-month EMA, forms a low, kisses the EMA, drops down below that previous low. Now, so what, you might think? Anyone can draw a few lines on a chart and a few arrows and predict where it possibly might go. And I agree, technical analysis is not some sort of all-seeing ball where you can look into the future, but it gives great clues because it's based on real price action. And there's some signals that are stronger than others. It's those long-term signals that take many months to form that can lead to the biggest results or the biggest impacts. Let's see what happened when previous kiss of death signals were conformed over the stock market. In 2000, we had the dot-com bubble. S&P reached a high of 1552, dropped below the EMA, kissed it, then confirmed the kiss of death here, and ended up falling all the way to 768, which represented a fall of 50%, and the bear market lasted about 2 years. Then in 2007, we saw a new high of 1576, dropped below the EMA, kissed it, and then confirmed the kiss of death here, with the market falling all the way down to 666, representing a fall of 57%. That bear market was a bit sharper, lasting about 1.5 years. Over the years, there has been some false signals, but not really that many. When there's been a genuine kiss of death signal, the majority of occasions have led to a significant bear market. There's situations like this in 1915, where it sort of looks like it could form a kiss of death, but it doesn't eventuate. And I wouldn't really say this pattern was confirmed because we didn't actually see a monthly close below the previous low here. COVID didn't actually produce a kiss of death because the fall was so great and then we saw a V-shaped recovery. But this current bear market's looking a lot more like the real deal. It's a grinding downtrend that's seen periods of optimism, which means it hasn't just been all fear and panic like we saw in COVID, which in my opinion shows that there's less chance of a V-shaped recovery. We've fallen 26% so far from the high, but if it ends up being similar to the dot-com crash or the global financial crisis, the fall would only be about halfway done and a 50% drop would give us a target of around 2,400. Moving averages are also great to help with long-term trends. A classic combo is the 50-day moving average and the 200-day moving average. Now when the 50 crosses below the 200, that's what's called a death cross, and it often signals the end of an uptrend or the end of a bull market. So as long as the 50-day moving average stays below the 200, you'll stay firmly in a bear market and prices will continue lower. But if the 50-day moving average crosses above the 200, that's a potential indicator that the bear market could be over. So that's two very bearish indicators, both pointing to further falls. So the charts are out of this world bearish, but what about the fundamentals? Well, they're probably even worse. The US inflation rate for September is 8.2%, which is stubbornly high. This will most likely mean higher interest rates for longer, which puts pressure on company profits and downward pressure on the stock market. On top of that, we've got wars, we've got out of control national debts, we've got extreme currency volatility, and we've got a housing crisis in many countries with house price falls starting to accelerate. So for more analysis on the global economy, check out this video here. So like my good friend Michael Burry says, it's like watching a plane crash. The stock market's just been given the kiss of death, and you know what that means.